Hello, I'm Mark Dunn, the editor of Portfolio Institutional, a magazine that focuses on the investment side of pension schemes, insurers, family offices, and charitable foundations. Welcome to the second of three interviews with asset manager NN Investment Partners, which looks at engagement. And this particular interview focuses on the nuances of proxy voting. Voting is a big part of engagement, of creating positive change in a corporate operations to improve its impact on the environment or equality. And to discuss this topic, I'm joined by Jeremy Kent, a senior portfolio manager at NN Investment Partners, who also just happens to be chair of the firm's proxy voting committee. Welcome, Jeremy.
Hi, Mark. Nice to be with you today.
Thank you for having us. Thank you for having us. And if you can start straight at the top, why is proxy voting an important part of active stewardship? I mean, how does it tie in with engagement?
Yeah, it's a really good question and really core to the active stewardship elements that we do as well as other asset managers. And you know, the two key components in active stewardship tend to be the proxy voting and the engagement. And really these two items can serve as complementary tools in equity investors' effort to deliver on the active stewardship objectives. And maybe just highlighting each in turn, really, the proxy voting specifically, you know, gives shareholders a mechanism that provides binding outcomes to the management when they're not perhaps acting in the best interest of stakeholders. And it's also done in a very public manner. So it's very evident to the outside world. So can be effective in those terms as well, in terms of broadcasting the really intentions of shareholders and stakeholders more largely to management. And then supplementing the proxy voting with an engagement strategy, you know, we think really creates this powerful combination and a much more effective approach in delivering on those active stewardship efforts and objectives that are being made. You know, a voting ballot can at times be a bit of a blunt tool, really, in terms of yes or no and sort of expressing your opinion that way. But when it's combined with that engagement, it really allows for the issues to be addressed in a more specific and idiosyncratic manner where you can touch on the nuance of what the issue that you're trying to elicit from the management or the board.
And what trends are you seeing in voting at the moment?
Yeah, again, good question. And I think you sort of alluded to this in your introductory remarks that, you know, with voting and pretty much elsewhere in the asset management world, ESG resolutions and ESG more broadly is very prominent and continues to grow in scale from shareholders. And this is certainly the case within proxy voting and shareholder resolutions that are coming up. And maybe just to frame a couple of sort of facts and figures around the issue and tackling it from a regional approach. Starting in the US, for example, the environmental topic has certainly grown in prominence. And if you look at average shareholder support for environmental proposals that have come up over the course of 2021, the average level of support there was 40% versus 30% the year prior. So you can see the traction that these environmental proposals are having and gaining in prominence. Sticking with the US, the increasing focus on ESG issues is perhaps even more evident in the social arena. And particularly around human capital management. Now, most of the votes that relate to human capital management tend to be around diversity of the workforce. And again, here, if you look at the average support of proposals within this regard in the US, last year that was 45%, where the year prior it was 28%. So again, gaining in prominence, and we certainly expect it to be the case this coming year as well. A number of the large tech companies have these diversity proposals on there, really relating to the transparency that companies provide to stakeholders on the diversity within the workforce, as well as the policies and procedures that are put into place. Turning to Europe, perhaps, executive remuneration remains really in focus and across a lot of ballots on the back of the Shareholder Rights Directive. This requires mandatory advisory remuneration report votes with regions like Germany and Norway coming into scope this year. So again, those remuneration votes will continue to grow in prominence. And then the last issue I'd probably note within the European context particularly is say on climate. So again, we saw a rise in the number of these votes over the course of 2021, not exclusively in Europe, but primarily in Europe. And like the say on pay equivalent for remuneration, this mechanism allows shareholders to vote on the company's strategy for addressing climate risks. By and large, these were broadly supported by shareholders, albeit the sort of uniformity and like-for-like nature of these is not quite the case. So looking for better alignment in terms of these say on climate votes that come up, and a bit more consistency in terms of what shareholders are seeking, but also the disclosures from the underlying managements themselves.
Okay. And how is proxy voting embedded into NN Investment Partners investment process? I mean, how is it being implemented to get effective results?
Yeah, so the starting point for this really is a global proxy voting guideline that we have in place, and this provides the breadth and consistency for the votes that we have across the organization. These policies are reviewed annually to gauge the appropriateness and make available to clients and prospective clients how we intend to vote on certain issues and voting intentions, really. So it gives a level of transparency to our clients from that respect. And these policies are structured in a way with the intention of aligning the company actions with the stakeholders of the business. And perhaps by way of example, if we think about something like remuneration policies, where we see they're not structured appropriately, for example, KPIs aren't correct in our mind, i.e. not sort of returns based or not aligned with the KPIs that we would expect that are appropriate for the company at hand, or perhaps those incentives are aligned to the short term rather than longer term performance. We have a policy in place to vote against those remuneration policies. We then have a proxy voting policy, proxy voting committee in place for manual review of key holdings, and again, to ensure that this policy is being implemented and enacted correctly across all the votes that we have. And then the final element is again, coming back to that transparency and disclosure. All of the votes that we do are disclosed publicly, and the rationale for the votes against management are fed back to the companies that we're voting against.
Okay, finally, I mean, why not just rely on NN Investment Partners' internal policies? I mean, why make it more nuanced than that?
Yeah, and again, this comes back to one of my original points as well, where I noted that the voting policy and structure tends to be a bit of a blunt tool in terms of how it's designed, and can be somewhat rigid. So it's great in capturing that consistency and breadth. But many of the voting items that come up require an element of sort of discernment and interpretation. And I think this is particularly true with shareholder proposals that come up that can be very nuanced in the types of disclosures or actions that it's requiring of companies that we vote on. And perhaps again, by way of example, last year, 2 large US tech companies had similar shareholder proposals in terms of their use and implementation of facial recognition technology as well as AI technology. However, one of the proposals was simply asking for a bit of transparency on the policies and procedures, whereas one was an outright ban of the technology to government institutions. So again, it's very difficult for a policy to encapsulate and capture some of these areas that require a little bit more effort in terms of dissecting what's in that gray area and where you're sort of responsibly. So really our view is combining a disciplined top-down framework with that bottom-up analysis of these sort of gray area or nuanced areas gives really higher quality outcomes to the underlying votes.
Jeremy, thank you very much for your time and taking us through what, of course, is a very important part of the engagement process. So thank you very much for your time and for sharing your thoughts with us. Thank you.
Thank you, Mark.